the world's been pretty crazy since March of 2020, and it looks like things are going to ramp up a lot. What do you think is, let's go back to like 2019, 2020, right as things started to hit the fan. What do you think about all this and where do you think we're headed?
Well, actually, John, I think the world got real crazy in 2008, 2007, 2008, which is when the system really died.
Mm-hmm.
Okay. I've studied currencies and currency life cycles since 1987. And what you see when you look at that are repeatable patterns that have happened over 4,800 times, 100% of the time. And so when you see that, it gives you an indication of where we are in the cycle and how many things that they're saying, wow, this has never happened before, where this last time this happened was in 2007, 2008, or 1913, or 1933, or 1960s, or 1970s, or 80s. What they're missing, and I've only seen one article actually expound on that, is what was happening during all those periods of times where that we were shifting from one monetary system into a new monetary system. And if you don't know that, how can you properly get prepared?
Yep. So what do you think about that shift? How do you think this whole shift is going to take place in March of 2020 compared to 2008? Obviously, that was stage 2 of it. But how do you see this whole thing continuing to go to stage 3? How do we get there?
Well, interestingly enough, even though they don't know how in the world the inflation started, I mean, I can't imagine anybody knowing how inflation starts. They were fighting inflation by rapidly raising rates. Now, here's the thing. Since 2009, when interest rates were anchored at zero, and we went into this massive free money promotion to make it appear like we were getting growth, because you can do that with debt. You can make things seem like you're doing well, seem like you're growing, seem like you're affluent, but at some point that debt gets repaid. And now we've got, whether it's governments, corporations, or individuals, we have walls of debt that are coming due, that typically the whole monetary system is based on constantly rolling over that debt. And they're rolling it over into interest rates that are what, 500-700 times what they were paying? Right? The opportunity to restructure their higher interest rate debt into lower interest rates was there. But then what they did was they kept going and they kept building more debt. And I don't care whether well, this is really mostly true in the corporate world because governments just keep building debt.
Yeah, $2 trillion in corporate debt has to get refied in the next 12 months.
Yeah.
It's an absolute insane bloodbath. Commercial real estate, $1.5 trillion by 2024, 2.7 trillion by 2027 has to get refied. There's I don't know if you ever heard of the All In podcast with David Sachs and Chamath Palihapitiya.
Yes.
But yeah, okay, cool. So David Sachs owns a building in San Francisco. Here's a good example: a $15 million asset. He has a $9 million loan on it. It has to get refied by the end of the year. He went to speak to his lender. His lender said, "Look, we'll give you 2.4 on a $15 million asset, but you have to secure it against your own assets." So, I mean, the fear is out there, but no one's really talking about it. The mainstream's kind of giving you like a little light indication of what's happening. But if you're out there and you're talking to banks, yep. If you're out there talking to banks, you're out there trying to get deals done, you see what lenders see, and that's the fear in their eyes.
Exactly. But of course, their job is to keep you calm and keep you in the markets. And, there's so much work that's even done off balance sheets that we can't even really see. I mean, how can you make an educated decision on anything right now? You can't.
Right.
And yesterday, so on Monday, one of the long Treasury bonds went below 50 cents on the dollar. And that's the second time in a week that that's happened. And that's the first time historically that I know of that that's happened. A U.S. government treasury, that is, the treasuries are the foundation of the global market. And what does that indicate? When something drops that much, it was from 98 cents when they sold them to 50 cents-ish below today, that's telling you that nobody believes or investors don't think that you're going to have the ability to repay this debt, at least potentially. That's the US government that can
Right.
simply do this to pay their debts. That's not good, because that's about confidence. And this is a con game, and it requires confidence.